There is a man out there who has been beating the stock market for more than 20 years. Not by luck, not through insider trading, not through some secret strategy. He sells for $997, but with pure, cold mathematical precision. His trading system makes money when markets rise. It makes money when markets crash. It makes money when everyone else panics and sells everything they own. Wall Street hates him. Financial regulators have investigated him. Major banks have no idea he exists. And most investors? They've never even heard his name. But here's what you need to know. While hedge fund managers were losing billions in 2008, his system kept printing money. While retail investors were being wiped out during market crashes, his algorithm was quietly outperforming every major index in the world. Today, I'm going to tell you his story. And by the end of this video, you'll question everything you think you know about investing. The turning point. Late 1990s. The dot-com bubble is inflating. Everyone thinks they're a genius because tech stocks are shooting straight up. New millionaires are being created every week. And in the middle of this chaos, a mathematician is working as a consultant for a large cooperative. Let's call him Mr. X. He's not flashy. He's not on television. He's simply a man with a master's degree in statistics and mathematics, doing strategic development consulting, boring corporate stuff. But while everyone else is celebrating their paper gains, Mr. X is looking at the data. And he recognizes a fundamental problem that has plagued investors for over a century. Most people only make money when the market goes up. Think about it. If you buy stocks, prices have to rise. If the market crashes, you're done. Your retirement account gets cut in half. Your diversified portfolio bleeds red. Essentially, you're betting that things will always get better. And Mr. X thinks, there has to be a better way. So he starts working. Late nights after consulting work. Weekends locked away in his home office. He combines statistical modeling, probability theory, and algorithmic logic into something completely new. He develops a trading methodology that can generate profits regardless of market direction. When he finally has something tangible, he walks into his boss's office with a full presentation. Charts, backtests, mathematical proofs, everything. He offers them the chance to be part of something revolutionary. The response? Too risky, too unconventional, too different. They reject him. This is where most people would swallow their pride, go back to their desk, and keep collecting a paycheck. Not Mr. X. He quits his job and decides to dedicate his entire life to proving them wrong. The obsession begins. Imagine walking away from financial security to chase an idea that might not even work. That's exactly what Mr. X did. He becomes completely obsessed. Every waking hour goes into refining this system. The walls are covered with mathematical formulas. His desk is buried under market data, statistical analyses, and algorithm flowcharts. He combines things that, according to classical finance theory, don't belong together. He finds patterns where others see only randomness. But there is a massive problem. He can think it, but he can't build it. All these brilliant ideas are trapped in his head, in notebooks, in theoretical models. But to actually work, this thing needs to be real software, real code, a functioning program that executes trades. That's when his son enters the picture. His son holds a master's degree in business informatics, a programmer who understands both the business side and the technical side. So now you've got this unusual alliance, the mathematician and statistician who can design the system and the programmer who builds it. Father and son work together, turning abstract mathematics into a functioning reality. Months pass. The code gets written. The algorithms are implemented. The backtests are run. And then something extraordinary happens. It works. Not kinda works. Not work sometimes. The trading system consistently beats the market. When stocks go up, it outperforms them. When markets crash, it still makes money. Or at least dramatically reduces losses while everyone else is getting slaughtered. The decade of proof. Of course, anyone can get lucky once or twice. Even a broken clock is right twice a day. But Mr. X isn't interested in luck. He's interested in mathematical certainty. So, over the next 10+ years, they do something most traders would never have the patience for. They test everything. Every market condition, every economic cycle. Bull markets, bear markets, sideways phases, market crashes, flash crashes, slow grinds higher. They remove randomness, optimize parameters, strengthen the system structure, make it more intelligent, more adaptive, more precise. This isn't a trading bot someone threw together in a weekend. It becomes the life's work of a brilliant mathematician, getting more refined and more powerful every single year. And the whole time, it keeps working. 2008 arrives. The global financial crisis. Banks are collapsing. Lehman Brothers goes bankrupt. The entire financial system is on the verge of total meltdown. People are losing their homes, their jobs, their retirement savings. And in the middle of this apocalypse, Mr. X makes a decision. It's time to let others share in what he has built. He forms a cooperative through which members can participate in the system's performance. By 2018, several hundred people have joined. The results? An average return of around 30% per year. Let me put that in perspective. The long-term average return of the S&P 500 is about 10% per year. Most professional fund managers can't even beat that consistently. They charge 2% in fees and still underperform, but this system, 30%, year after year after year. For most investors, this sounds like a fantasy, like something too good to be true. But here, it's simply mathematics and statistics. The investigation. Now, when you're making this kind of money consistently, people start asking questions. In 2018, financial regulators come knocking on the door. The official justification? A cooperative is not the appropriate legal structure for a return-oriented investment product. But you have to wonder, is that real the true reason? Or did this system simply work so well that it made people uncomfortable? After all, the entire financial industry is built on the idea that it's nearly impossible to beat the market consistently. That's why investment funds exist. That's why wealth managers exist. That's why people pay for financial advice. But if a mathematician and his son can build a system that consistently crushes the market, what does that say about everyone else? Mr. X decides not to fight. He agrees to convert the entire structure into a joint stock company to avoid a prolonged legal battle. It's a hassle. It's expensive. It takes time, but it also opens new doors. The expansion. After the legal drama, something interesting happens. The system doesn't just keep working, it gets better. They expand into additional markets. The Dow Jones, the DAX, the S&P 500, the NASDAQ. More data, more opportunities, more ways to extract profit from mathematical inefficiencies. And the results? Still absolutely outstanding. From 2018 onward, annual returns regularly exceed 30%, often significantly outperforming every major index on the planet. But here's where it becomes truly extraordinary. These results are not just claims, not marketing hype. They are reviewed and certified by independent, reputable auditing firms. Real accountants, real audits, real numbers. This is documented, proven performance over decades. While crypto bros promise 1000x returns and lose everything. While day traders are blowing up their accounts on Wall Street bets. While financial gurus sell courses on passive income. This mathematician has quietly, doing what everyone else claims is impossible. The silent revolution. Here's what blows my mind about this whole story. While banks and hedge funds manage trillions of dollars, employing thousands of analysts, and use supercomputers, AI, and every imaginable advantage, a mathematician and his son built something better. No billion-dollar office buildings, no team of Ivy League PhDs, no $25,000 a year Bloomberg terminal. Just mathematics, just logic, just obsessive dedication to truth in data. It's a completely silent revolution unfolding in the background of the financial world. No press releases, no CNBC interviews, no book deals, just results. Out row! So what does this story mean? To me, it means the financial world is not what we've been told it is. We're taught that markets are efficient. that you can't beat them consistently, that the only smart move is to buy index funds and hope for the best. But Mr. X has proven that this isn't entirely true. With the right mathematical approach, the right system, and the right obsessive dedication, you can beat the market. You can do what is supposedly impossible. The question that keeps me up at night is this: how many other people like Mr. X are out there? How many brilliant mathematicians, programmers, physicists, and obsessive geniuses are running systems we've never heard of? How many secrets are hiding in plain sight while the rest of us are fed the same tired investment advice from people who can't even beat the market themselves? I don't have all the answers. But one thing I know for certain: the financial world is not what it seems. There are levels to this game that most people don't even know exist. If this story changed how you think about investing, do me a favor and subscribe to the channel. Because there are more stories like this, more secrets, more systems, more people doing the impossible, and I'm going to find them. The game is rigged, but not in the way you think. Some people figured out how to win it.